All right, welcome everybody. This is going to be a weekly recap here ending on June 12th of 2020. But we're going to start off, we're going to address something that, it's a question that comes up quite a bit, particularly when you're trading binary options. And that is, how do you exit? Okay, how do you get out of a binary position, whether you're buying or shorting? And what I have found and what works for me is it really depends on what kind of order you're putting in. Are you putting in the money, or are you trading an out of the money? So for those that may not be clear on what in the money or out of the money means, is that when a set of 5-minute strikes, because we trade 5 minutes, okay, when we are trading 5-minute binaries, okay, when that set of strikes open up, it's going to open up at a particular price, okay? We call it the indicative price, okay? So here's an example of a couple setups here that we had for the week. So as you can see here, obviously familiar with candlesticks, if it's red, obviously that means it opened up here and it closed down here. So it was a down bar, right? That's a down candle, a red candle. If it opens and closes higher, okay, within that 5 minutes, you get a green candle, right? But what you have is you have this body here, and that spike means prices went up that high and it settled down, but your opening is going to be right here, okay? Because this green or this red is always going to be based on the opening. So if it closes above the opening, it's green. Closes below the opening, it's red, okay? Most people know that about candles. So when a new set of strikes open up, you have two options, okay? If whatever your strategy you're using indicates that the market's going to go down, you can either sell an in the money or you can sell an out of the money, okay? The question is, first of all, what is the best one to put in the money or out of the money? And then based on that will dictate how you're going to exit. So let's talk about that for a minute. Okay, so in the case like this, we have an indication that the market's going to go down. All right. Now, unless you're using something like the crystal ball, which is something that I use quite a bit in my personal trading, and students that are using it use it quite a bit. The crystal ball does give me indication of the size of the move. But if you don't know the size of the move, all right, you still have two options. And unless you know the size of the move, there is an option that's really not the best one to trade. Okay, so in a case like this, if we see that the market's going to open up, if the market's going to open and then going to have a strong move down, I want to be selling an out of the money. So an out of the money is always going to be where you're going to get the best premium. It's never going to be in the money. So in other words, if it opens and you sell a strike that's above the opening, it's going to be called in the money because it's already profitable. But you're not going to get the same kind of premium that you would get if you're selling out of the money. So you get an in the money, you may be able to sell it for $30, maybe only $25. Or if you're selling an out of the money, so basically what you do is if you're selling it for $20, $30, you're risking what? $80 to $70 to make that $20 to $30. But when you're doing out of the money, you can sell them for $80, $90, right? And you're only risking $10, right, to make $90 or $20 to make $80. So it makes more sense that you want to do more out of the monies than you want to do in the monies. But that doesn't mean that you can't make money either way. But the key is that depending on how you enter, whether you're going to do an in the money or out of the money, will decide how you're going to exit. And so what we do, if we're trading in the money, the most important thing is you want to capture as much premium as possible. You don't want to be selling something for $30 and get out as soon as you make $15. That just doesn't make a lot of sense. So whenever you're trading the in the money buy, whenever you're entering the in the money strike, you want to carry it to the close. You want to let it expire, okay? You don't want to be putting in stops. You don't want to be getting out early. You want to capture as much premium as you possibly can. Now, on the other hand, if you're doing out of the money, you do not need to carry it to the close. Now, there are going to be situations to where you can. But in most cases, if you're doing out of the money, let's say you're selling at $85, $90, you do not need to capture that full premium because you're only risking $10, $15, maybe $20. So once you double or you triple your risk, then you exit. So basically, out of the monies we scalp. It's called scalping because we're going to be getting out. And in the monies, we're going to be carrying it to the close. The idea is to capture as much premium as possible. So where would an out of the money situation be where we would hold it? An out of the money situation would be where we would hold it is if we sell an out of the money, and let's say we get a really good premium. And then everything is showing that the market's going to have a really strong down move. And sure enough, it starts collapsing and just keeps going lower and lower and lower. I'm going to try to hold that as long as I can to catch as much premium as I possibly can. Okay. Just because I sold it at 85 doesn't mean I'm going to be getting out at 65. I may get out at 55, 45, 35. It really depends on the strength and what all our filters are showing, and the other things that we look at are showing that if it looks like it's going to continue to have a big move down, we will carry it and try to pick up that full 80, 85, whatever it is, dollars, okay, with a small little risk. The other advantage to out of the money is I can be wrong 2 or 3 times, and all I need is one nice little trade, and I'm in the green again, where it's totally different when in the monies. Now, when you're trading in the money, the money management you use is going to be different, okay? You're going to have to adjust contract size, and I show my students how to do that. When you're trading out of the money, you don't need to be as specific in terms of the contract sizes because you're not risking much, okay? You can risk 40, you can have 3 losses in a row, say risking $15, that's what, $45, and all you need is one little trade to get you green again. So it's totally different than if you're trading in the money. So that's one of the things that I like personally about the crystal ball is the crystal ball does tell me the size of the move. It gives me an indication of the size of the move. And so when my crystal ball tells me that it's going to have a large move, whether it be down or up, then I'm going to be doing out of the monies. If the indication says that it's going to be a small move, I'm going to be doing in the monies, okay? And it's just the opposite on a buy, right? So on a buy, it's the same thing. If there's an indication the market wants to go up, it opens here, I'm going to buy an in the money, which is going to be a below the indicative. And if I feel it's going to be a strong move, I'm going to be buying above the opening. That's going to be an out of the money because that's where I'm going to get my best premium. Okay, so it's really important. There is no one exit fits all, okay? It depends on whether you're trading out of the money or in the money, particularly with the 5-minute binaries, okay? It's a big difference. So anyway, that's something that I get asked a lot. I thought I'd go over it, make it clear for everybody. If you're trading binaries, whether you're using my approach or some other method, that's something you really want to pay attention to. You don't want to be selling something for $17 and trying to scalp out of it. All right, so, you're risking what, $85 or more to make $17. You're gonna have to make a lot of wins to make up for that loss. But if you're selling it for 17, then you better carry it to the close. You cannot get out early. You want to capture as much premium as you possibly can. All right. So with that being said, let's take a look and see what our stats look like for the week. All right. So here's the stats for the week. Stats surprisingly were weak. To be quite honest, I've never seen the naked stats be this low on several of these. So as I always say, whenever things are weak, and our stats are below what they should be, that means we have a much stronger market coming up in terms of our winning percentages. And so I have a feeling that this coming week is going to be one of those great weeks and definitely want to take advantage of it. And that's the other thing is the markets are going to go through, and we've all seen it, right? You go through these periods of time when it seems like no matter what you do, everything makes money. But then it seems you have those days or those weeks where it seems like everything you do is losing money. And so the difference between a professional trader and a novice is understanding how to survive during those weaker times. And, there's a lot of different things that we can do to cut back our exposure, which I teach in the core strategy course. But also the thing is that whenever you go through a period of choppiness, that means you're going to start seeing a lot more markets have follow through and a lot more better opportunities. So, but let's take a look at it overall. Sunday nights, obviously, my two strongest have always been the Aussie and the Euro. Disappointing at 60 and 50%. Of course, these are naked signals. This is assuming that you just bought and sold on every setup. It doesn't include any other filtration which we use. But if you just want to nakedly buy and sell them, these are the kind of percentages you're going to get. Okay, I don't suggest you just go out and nakedly buy and sell. But nonetheless, we're still, above where we should be, except for the pound. The pound, 14%. I don't think I've ever seen the pound that low. Pound is my weakest of all of them. But whenever I see a weakness like that, it tells me that we're probably going to start picking up here. So that wouldn't really surprise me to see some really strong opportunities come up on the pound. But nonetheless, I'm also tracking the first trade wins, meaning I'm looking at every first trade every morning. We start at 8 a.m. every morning. I look at the very first trade, and it could be in any four of these. It doesn't matter which one it is. And this is based on this is based on the naked signals. And whatever the first one is, we're taking it, and we're looking at the results. And this week, unbelievably, even though the stats were low, the first trade out of the gate were super strong at 100%. And that's the other thing is what you're going to find is there are times in the market where things are going to be better, than they are at other times during the day. First thing in the morning, we know is going to be very strong. We're definitely going to be taking advantage of that. We're also going to be doing a lot more out of the monies than in the monies, but it just depends on the market conditions. But out of the monies seem to be better first thing in the morning. Then as you go in the afternoon, in the mornings are going to be out of the money, and the rest of the day is going to be more in the money trades. So anyway, nonetheless, mornings have been strong, and then in the afternoon, that's what's been hurting a lot of these stats as you get into that choppy period. Right after about around close to noontime, and it stays that way up until about 2:30 Central Time, which is 3:30 Eastern Time. So that's what hurts a lot of these stats is what happens first thing in the morning, what happens in the afternoon. So mornings are strong, afternoons can get really weak, and it kind of messes up the stats. But nonetheless, overall, we did have some really good days. I don't trade Wednesday night, Sunday night. That is called solo night. My students are on their own. They have access to the charts, but they don't have the setups. The arrows are showing where to buy and sell and so forth. And so it's a really good educational tool in the sense because you don't want to rely on any kind of indicator in terms of buying and selling, whether it's a pattern or whatever. You want to be able to spot it just looking at the charts themselves because you get a better feel for the action of the market. And that's what I teach. I teach my students how to read the action of the market. Any good trader that makes money on a fairly consistent basis, particularly day traders, know how to read action. So if you want to be a short-term trader and trade 5 minutes, you need to know how to read action. And action is so important. So not having those indicators or not having those arrows in there when I'm buying or selling on the naked stats is a really good learning tool not to have those. But the rest of the week, they're available so people can see them. It's really used as a visual tool to help them identify it, but it's not something that you really need as you move forward. But going towards the end of the week, things started to pick up, started to see a lot more better stats. Here's 80%, 66 was a little bit low, but the next day, see, you come back and you start hitting at, 89%, 88%, and so forth. So, but not super impressed with the total stats. When you average everything out, average in the mornings at night, we're still close to 70%, a little bit above average there, close to 70% on the pound, which actually is a little bit high for the pound. I'm surprised. U.S. yen, close to 70%. So as you look at everything as a whole, still not percentages considering they're strictly naked stats, no filtration going on. Daily setups, I'll report on that at the end of the month. I think I'm still up about 30%. It's been a little choppy in here. But we're still looking at all those numbers at the end of the month. Or if you want to look at them sooner, all you have to do is just get on my email list, go to binaryprostrategies.com, and we'll make sure that you get a link so you can look at those daily stats. I update it every day at the end of the day, let you know what the results were, and then you can look at it. I trade all the currencies. I trade the commodities, gold, silver, crude, S&P 500 on the dailies, and then, of course, all the daily currency pairs. So if you want to see how they're doing, and I break it down per commodity and or per forex pair, you can look at that as well. So anyway, that's it. Looking forward to the next coming week. Just to let you know, it looks like we're going to start having some new hours available next month. I'll be talking about that later on, but we're going to be expanding our trading hours, going to be doing more crystal ball trading for my crystal ball traders. We're going to have a dedicated time where we're just going to do nothing but crystal ball. So instead of being at once a week, it's going to be at least 5 times a week. So it's kind of something I'm really looking forward to, because that is something that I use quite a bit, and it's always been a focus on my trading besides the PAPs. So anybody have any questions, just let me know. Go to my website. You can get a hold of me that way. Leave comments below. Come back and answer them as soon as I get back on. Please subscribe if you like what you see. Give me a thumbs up. Let me know you like this. I'm going to want to put out a lot more material here, but I really want to get everything settled here. And then once I start doing the crystal balls, I like to get into doing some daily videos so y'all can see just how strong this the crystal ball really is. So that's something I'm working on, and should have that out pretty soon. Don't ask me when. I really don't know, but hopefully sooner than later. All right, everybody have a great trading week. Looking forward to Sunday night with my students. Sunday night's always my favorite night. And besides that, I will do the next update for next weekend, next either Saturday or Sunday. Y'all take care.